Okay, welcome to this week's market overview. We're just gonna dive into the charts, especially the Bitcoin chart, plan for the week ahead, and kind of look at the main key indicators that we should be looking at and that show us exactly where price looks like it wants to go, and plans that you do want to see play out, things you don't want to see play out, and kind of cautionary tales and kind of my plan for the week ahead. So yeah, let's just dive into it. Okay, so let's dive into the daily time frame first. What we're seeing here is, of course, the break, all-time high. I do believe that if you would have asked me that when we broke all-time highs, and I've been telling people this for a while, that like once we break those all-time highs, it's going to be front line on every newspaper, on every news channel, on YouTube, on everything, and it's going to be the news of the year. That has not occurred like that at all. We've broken all-time high repeatedly, over here first. Well, at least on Coinbase, over here first. On Binance, we just tapped it, but on Coinbase, we just broke through it. Then we broke it again and broke it again, so it's just, we're consistently putting in new highs, but it's difficult. News-wise, it's not really catching on. So the FOMO rally from retail that I'd been expecting is not really occurring, which is kind of strange and kind of unexpected because, to be fair, like that is something I had planned for. But that's not occurring right now. So what can we kind of expect, right? So on the higher time frame, I think the worst thing that you don't want to see, or it's not the worst, but it would be kind of tough short term, would be to see some type of deviation set up here. Right, and I have this line drawn out right here, but up to like 74k deviation. Now, of course, we kind of want to zoom in on this, but just for clarity's sake, this green line is the previous all-time high on Binance, right? 69k flat. So what you don't want to see, if we zoom in on the daily, is this to set up some type of range, right? And then kind of like this, and here's the green line all-time high. You see ATH here. And this kind of break down and start to form an acceptance below that level, because I think at that point we break down even lower to like 60 or 56. Somewhere here is probably the main support area, and the next VRVP level, etc. These kind of levels are going to be down here. But at that point we do have a down, like a bearish market structure on the lower time frame, and even on the higher time frame, if this forms out, we're starting to form a bearish market structure, which is kind of difficult, or it's kind of tough to see after such a parabolic rally over the last few months, where we've seen such a crazy nice rally, that to start seeing real bear structure form up aggressively. So you kind of had that, here you could argue a bearish structure, but it wasn't aggressive. And I believe that with this volatility that we're at right now, we're going to see a lot more aggression. So it's going to be a lot more volatile moves. So once we break down below 69, you're going to see a quick dip, things like this, kind of liquidation events, etc., which makes it a bit more tough, so to speak, than it usually was in the previous down moves. That doesn't mean this is a guarantee. It's just kind of something I'm expecting. So what can you kind of expect? So if this does form up, what I would like to see bullish wise is some type of range setup, just consolidate above that all-time high and continue to rip up. Especially because if you look lower time frame, we have kind of set this as resistance that we currently flipped as, hopefully, if we come down here already as support, but now we want to see that continue as support and a rally upwards. So that's kind of the bearish case. Bullish case, I want to add like the medium case, which is, that's why this line is drawn here, some type of test of about 74, come down, hold this, and you kind of just are hovering around that all-time high, and you just set up this range from 64 to 74, and you just slowly accumulate, or reaccumulate rather, and then you see a rally. I think the most bearish case that I would see kind of is a addition to the initial case that I made for the bears, which is you kind of come down here, you create acceptance under 69, you reject under it, you break below 64-ish, come down to 58, and this is where it gets interesting, right? So this is where I would want support to hold, right around here, right here at 58, which is, if we go to the 3-day, you can see it's kind of this previous order block level here. You could probably draw this a bit better, like around here, and it's this fair value gap that I've marked out here as well, right? So that's kind of what I would love to see. And then you have this both mitigation. This is kind of my key dip buying level. If we come into here, I'm buying. Yet, if we do come down here and we continue to see a breakdown, then it's kind of like I have all these levels marked out, right? And I think some of them have been adjusted a bit by myself by accident, because these are not supposed to be here. You know, there's some key levels here. These are not perfectly marked, but you know, I'm just like tossing them around right now. Something happened to my chart that's not correct, but okay. You see these kind of key levels, in my opinion, it's like 48, you know, it's like 43 or something. I think it's also one, you know, 43, 38, so around here, and 33 around here. These are kind of the key levels, I think, that hypothetically speaking, and I think this is a very difficult case to make due to the fact that Bitcoin is intensely bullish, and we're seeing all this ETF inflow, and we're seeing kind of like adoption by institutions, and you still have the ETH ETF coming in, and you are at all-time highs. So it's kind of difficult to make this case. At the same time, it's not particularly. You can see here all-time high, put in aggressive dip, accumulation, new all-time high, right? So it's like this, let's call it a double cycle, right? So it's like this entire cycle, you're like, okay, that's the bull market, here's the bear market, wait, we're still in the bull market, retest all-time high, and here is the bear market, right? So if we see, and if we hypothetically speaking want to look at something like this, let's just delete all this, then you could easily see this kind of as a deviation above 69, right? Take of that kind of liquidity up there and kind of FOMO everyone in, and before you know it, you kind of see this dip come down aggressively. Yet I would say that the lowest we likely are to go is around 40, right? And maybe we see a deviation of 38, and then we continue upwards. So I think this is the most bearish case, where we continue to see bearish market structure, so to speak, and you continue to see acceptance below these key levels. And there's a lot of air down here, so to speak, you know, like this is a fair value gap over here. This is not, you know, there's no strong structure here. Now you could kind of extrapolate resistance and support from previous price action. You know, you could definitely say there's something here at 44, 45, you know, here's something at 40. We could definitely say there's something here. You know, you can kind of mark out key levels like that and say, well, that's definitely gonna hold as support or resistance. Definitely is a word I would never use in this market, you know, and maybe here. So here's some key levels that I would just mark out, like from previous price action over here and some over here. And like this resistance area is very key, 30. But I would say that you could see something like this with this low being this low, you come down. But like, I think the precursor to all this is continuous acceptance below key levels. So that's acceptance below 69. Then we need to see acceptance, a rejection from 60 from the underside, so to speak, which you kind of see right there, right? And then ultimately, you know, a breakdown and maybe a retest, and then come down. And that's when we can start seeing this. But before that, I really wouldn't be planning on this and wouldn't make this your priority plan. I would just say this could be the case. You know, we've seen it before. You know, we've seen 50% dumps from all-time highs. Yeah, so be cautious for that. But for the most part, I think you just want to see spot flows, what they're acting like. Coinbase, are the TWAP still on? And yeah, you kind of want to see this range around this level and go up from there, rather than, you know, start breaking down heavily. And I would start buying at 56 just as a marker. For the rest, when it comes to trading. Continue to check the spaghetti chart. Just check for what's strong. We can see here 0x is strong right now. Injective, bond, ton, front. Front is low liquidity, so maybe you don't want to play that. Bond, same case. So continue to check the spaghetti chart. Additionally, I do have this new template that I got from a great friend of mine, amazing trader too. And with this one, you can kind of see narratives. So ETH beta, Bitcoin beta, meme, AI, DeFi, gaming, metaverse, L1 and high caps. And you can kind of more strictly see what narratives are pumping or dumping right now. You can see that some had a more aggressive dump than others. And you can kind of just do the time frame thing too, where you can see like which ones are recovering very well. You can see your L1s and high caps are recovering really well with injective. Near was, what is this? This one was XLM, tried to recover, but this shit got bonked. AGIX, AI coin doing very well here. This was doing very well second ago, SSV. You can kind of see things like that. So this is an amazing chart, amazing tool to have. And then for the rest, this spaghetti chart, of course, the full template is online. You can download it, but you can also just remake it with your own coins, whichever coins you like. I just have fucking 100 coins, 76 coins in here. So, and that video is online. Spaghetti chart, how to make a spaghetti chart, is on my channel. Just check it out. So that's the game plan. That's the higher time frame, lower time frame. I'll just cover lower time frame again very shortly because I don't think I went too deep into this. Lower time frame, 69K is kind of the key level. This level is hypothetical. We're at all-time highs. What you don't want to see, or lower time frame, what you could do is some type of dip buying here. That's the kind of support area, which is 69K, hoping that it kind of turn into support rather than still resistance. And if you see acceptance down below, I would be scared of taking shorts because, not scared, but I would be reluctant to take shorts in this environment because the environment has been buy the dip environment. You could have said over here, this was the resistance, this was the resistance. We broke over it. We had this big dip, and I'm sure a lot of people shorted right here, right? Which was kind of the bottom side retest of this resistance level, right? So came down below, retest, and people probably shorted right here. And before you knew it, we were up here, full Dalai pattern, and just continued up, right? So that also, I want to add, I've talked about the Dalai patterns a lot. It kind of comes down to the fact that I'm wondering when these stop playing out, right? So when is that kind of that time frame of Dalai patterns continuously working gonna end? Because eventually they will. Eventually people will get used to the fact that we have Dalais, same thing here. Just a full bleed, boom, recover, and up. And eventually retail is going to get used to it. And that's when you want to be afraid, because that's the time it's not going to work, because everyone's going to be buying the dip and the dip keeps dipping. That's about it. I think that covers lower time frame. So it's all about acceptance below levels and holding as support, as it always is. But I think more now than ever, and continue to monitor your favorite altcoins to kind of buy the dip and long the dips on rather than short. I think over eagerly shorting, and I've seen this on some people in some group chats that I'm in. I'm short here from 67, so they entered some type of short, fucking, I think probably over here somewhere, I think it was, and then you see like a few hours later they get fucking bonked out. And with this type of wick, you probably just lost some extra money due to liquidity, so that's kind of the thing. You don't want to be one of those losers, right? So respectfully, but yeah, that's about it. I'll see you guys around. Happy trading. Check everything out in the description. Much appreciated. Much love. Good luck.